All right, so the whole idea of market memory and utilizing the wave, for me, really was born of something very specific and something that I observed from teaching literally hundreds, if not thousands, of traders from all over the place. And this was what I realized, that traders mostly put a very random amount of data in front of their screen. It depended upon their screen size, it depended upon whether they were nearsighted or farsighted, it depended upon how they sat in front of the computer, it depended upon a number of things, how many monitors they had, but none of it was consistent. They did, from my observation, very few traders sat down and actually consciously determined what was going to be on their screen. And then furthermore, I found that new traders tended to look at very little data, and experienced traders tended to overdo it. So then what I started to do is make a study about why, I started asking them, and I started to take notes, why do you choose the amount of data that you choose? Why was it a situation where you chose 2 months on a daily chart, or why was it you chose 5 days on a 30-minute chart? And most of the time people didn't really have a good answer. It was whatever was comfortable. And I thought, okay, well, this is no way to determine a way to trade. There was no way to have a consistent reading of price action with that kind of approach. So, like I said, what I did is I determined I would figure out what the memory of the market was depending upon the time frame. Everyone follow me? So what that meant was this. If short-term time frames, like a 5-minute chart, are a very near-term, very short-term slice of the psychology of the market, 5-minute charts are twitchy. The opinion of the market will go up, down, whatever it may be. But short-term time frames are a very near-term slice of psychology. It's a very near-term slice of opinion. So if I see the opinion of a 5-minute chart, is that something that's going to affect the way the market is perceiving the trend and support and resistance for more than a couple days? Probably not. In fact, my experience was that essentially what happened with 5-minute charts was that they were like one of those, what do they call them, tsetse flies, or they're basically 24-hour lifespan. That's what I found the 5-minute chart was like. Really, much more than the previous day's high-low close. So you needed about 2 days, was about all that I saw traders really cared about. And this was not just anecdotal, but this was when I started studying how the price moved the next day. And this also had to do with how popular pivots were on 5-minute charts. So I started putting all these little anecdotal observations together and realized, okay, on a 5-minute chart, you need about 2 days. That's about it. Okay, maybe 3. Maybe 3. And that third day only came in if there was a significant rally or sell-off or high or low that was established, or if you trade stocks and futures like I did in the 90s very actively, if there was a big gap. But for the most part, that 5-minute has a very short-term lifespan in terms of the memory of the market. So then when I went out to like a 15-minute chart, I realized, okay, this is a slightly longer-term time frame. I don't think the market memory is going to get that much bigger, but again, what are the highs and lows that are respected? What are the trends that are observed? And when I started researching the 15 more, I found that really no more than a week. So basically about 5 trading days was about all the market memory a 15-minute chart required and reflected. So what does all this mean? Well, if I'm looking at a 5-minute chart, I only need about 2 days on my screen. Okay, and I'll consistently use that 2 to 3 day look back to observe the trends, to take note of highs and lows, to draw my trend lines, to look for Fibonacci retracements. Whatever my analysis is, I'm going to do it within that 2-day look back. Now this does not mean you cannot leave that look back. It doesn't mean you're stuck there for the entire life of your trade or your analysis or anything. Not at all. You're going to make a few key observations from that look back. And here they are. Again, we talked about a couple of them already, but you're going to make note of significant highs and lows. You're going to make note of course, the angle of the wave. Is it 3 o'clock flat? Is it heading up between 12 and 2? Is it heading down between 4 and 6? Is it kind of lumpy, bumpy the way it is right here and more of a 2 to 4? You're going to take a clock angle of that wave, the 34 EMA, high, low, and close. If you like Fibonacci, you're going to look at last major rallies and sell-offs. Okay? Here's a last major rally. Here's a last major sell-off. You're going to take notes of those. You're going to take notes of, in terms of the overall direction of the market within that look back. Has there been an overall trend? Has the market been choppy? Okay? So you're just basically going to be taking a slice of that psychology. Again, a 5-minute psychology is very short term. 15 is relatively short term too. I'm going to be looking at about 5 days, as we mentioned before. I'm going to be taking all those same observations. Overall trend, I can see here, while it may not be pretty, over the past 3-4 days, I can definitely see that the 15-minute chart, basically from the 25th to about the 26th, Thursday to Friday, was definitely an uptrend. But if I go back deeper within the market memory, I can see that we came from a higher high and headed down. Now, if I was only looking at the 15-minute chart like this, I would think, wow, this thing's really recovering. You know, if I took a 2-day look, but that's not enough. Take a clearer look, a more complete look, and you'll notice that really the 15-minute chart hasn't really gone anywhere. We've had some decent trends. The market's moved down, the market's moved up, but overall, when you look at this chart over the past week, it really just kind of held steady, didn't it? We've had a lot of volatility, but not a lot of change of opinion. Here we were at the beginning of the week, right here. Take a look where we ended off at the end of the week. We went all over the place. We took the scenic route just to basically come back to where we started. If I didn't have that market memory, if I was basically looking at simply the last 2 days, I would have a very different opinion of what the Euro-US dollar has done this week. Okay? Okay. How about a 30-minute chart? 30-minute chart is a minimum of 1 week, a maximum of 2. Now, when I talk about minimums and maximums, I absolutely understand that our axis control down here does not necessarily allow us to go to an exact date. I get that. I know that. It's something we all deal with. So get as close to it as you can. Okay? Now, my rule of thumb is I realize that sometimes it can jump quite a bit. Like, for example, here, I'm looking at about 10 days, aren't I? Well, if I know my minimum's 1 week, 5 trading days, my maximum is 10 trading days, I can live with 11 trading days. I can live with that. Okay? If I want to have the full 2 weeks in here on the 30-minute chart, if I squeeze it in again, notice how it basically takes me to about 3 weeks. This is probably more than I need. Here's where it's a little subjective. Use your judgment. If your look back is a minimum of 1 week and a maximum of 2, 11 trading days is, 10 trading days, that's fine. Okay? What we're looking to do, again, is get an idea of where the market's been going. Okay? Definitely get a good reading of the wave, the last major move, all those types of things. Okay? So, again, I realize that we won't be able to go exactly that date, but, use your judgment. I'd rather you have a little bit more than necessary, but if you have a 30-minute setting of about 1 to 2 weeks, if you're in the middle of that, that's absolutely fine. That's absolutely fine. Okay? The 1 hour chart is 2 weeks. Okay? I would like you to have 2 weeks. Does that mean sometimes the way the axis is going to slide, you might end up closer to 3? Yes, and that's fine. Okay? Here we have about 3 weeks. And again, I can get my clock angle reading. I can see that overall we've been heading down. Series here is, every time we've gone up to make a high, we've headed down low. And all these subsequent highs have been basically a little bit lower. So when the market does come up, it's coming up to a lower level. Do you see that? So this has been a series of lower highs. I can see that from the market memory. If I was looking at a view like this, which I see a lot of traders do, this doesn't really tell me a whole heck of a lot. Sure, I got a pretty decent angle on the wave heading up, but this doesn't show me that series of lower highs that we've been seeing over the past almost 3 weeks. So while I am taking a market cycle reading to determine how I'm going to trade the Euro-US dollar right now, again, having this market memory, having this overall view does give me an idea of what the market's been doing. and it's going to give me